say that you've topped out for the year, what could be the upside risk to your forecast? What if earnings they surprise us? What if crude prices they come down? What if the macro concerns which you alluded to they start reducing?
Well, I think the sort of upside risk to my forecast or my views will can possibly come from global factors. You mentioned currently we are looking at oil at 70. If it corrects to like 60 or 50, I think that'd be a big boost for the Indian sort of macro conditions. Also there is this expectation that the ECB will begin to taper down and will kind of not do as much monetary easing as they have been doing. So if there is any change of view on that, and ECB and the BOJ etc. continue to print money as fast as they have been, then obviously those are the big global factors that we'll need to keep in mind. It will impact not only India but the rest of the markets as well. But back home, what can be the risks on the upside? I would say the earnings upside risk to my mind appears to be limited. I mean, on the positive side, I mean, because while we have seen some improvement, so this year as in FY18 will be the first financial year after I think a gap of like 5 years that we will be looking at a double-digit earnings growth for the Nifty, and that's clearly an improvement. But if you look at the earnings expectations trajectory, that still continues to get revised downwards. Also, the next year's consensus forecast is about 20-21% of Nifty earnings growth. A lot of improvement is already priced in. So I would say that earnings surprising further on the upside looks like a very, very low probability event. But yes, but on the macro side, what we'll need to watch out for is if the government is able to implement the compliance improvement measures. I mean, on the GST front especially. So we saw this e-way bill getting introduced from 1st of April. So we see, we will see what kind of tax collection improvement, it brings about. My personal view is that we really need to see the invoice matching mechanism to come through for a big improvement in the GST numbers. And given the political compulsions this financial year, I don't think it is likely. But we will need to see what happens on the tax sort of front as well. That could be a possible source of upside. But as I said, that's not our base case.
Morning, firstly. Was RBI's policy and the tone of theirs yesterday only, does that bring about only more conviction to your stance that the market upside for the rest of the financial year may be capped? The fact that on the face of it, it all looked very dovish, but if you did look at the outlook and the details and the footnotes, you realize that it's a very hawkish statement. The fact that they're talking about trade wars, that they're talking about the market volatility, and as to how that's a big challenge to the outlook.
Yes, so on the face of it, the fact that RBI revised downwards its inflation expectation for first half and also for second half definitely comes across as a relief, and we've seen the bond yields coming off sharply after that. And in fact, bond yields have come down sharply in the last sort of few weeks. But yes, then at the same time, the governor very clearly highlighted the upside risk to the inflation, which is the MSP increase. To my mind, I think it's a given that there will be a very large increase in the MSP. I expect it to be around 15% mark for the Kharif crop. So I think that is one upside risk to the inflation forecast. Also the other risk will be that of a fiscal slippage, which is also something that the governor specifically talked about. So I think those are clear risks to the upside as far as inflation outlook goes. To my mind, these are our base cases. That doesn't seem to be the base case, for the rest of the market, but for us, that's really the base case.
Are you a little surprised that the RBI kept absolutely mum on the current issues with some of the PSU banks or some of the large corporate private banks as well being tainted because of nepotism involved, although there are proceedings going on? But the RBI was completely silent on those. And does it only give you further conviction that perhaps this is a pocket you got to stay away from? You still don't know how these murky details are going to evolve, because in your recent strategy, as well as I understand, you've cut your weightage on some of these banks.
Yeah, so the thing is that, if you'll ask me, from a 3-year point of view, within the banking and financial space, where do we see attractive valuations? That's clearly on the corporate bank side. There have been concerns on NPL to a large extent. Those have played out. So if you'll ask me from a long-term perspective, yes, it makes a lot of sense to look at the corporate banks, both on the private side and maybe the top tier PSU side as well. But tactically speaking, because of I would say 2 or 3 uncertainties in the near term. One is what you highlighted about the recent controversies. The second is on the NCLT side as to what kind of haircut might be needed to be taken for several cases. So we have seen that in case of cement and in case of steel, possibly the requirement of haircut isn't really all that large. But there could be a large haircut in many of the other segments. So that's the near-term risk for all the banks, basically the corporate banks that have had NPL-related issues. And the third is also what happens with the Ind AS implementation. Although now with RBI postponing the implementation of Ind AS by a year, maybe there is that much of a kind of a freedom. But these are the 2-3 near-term issues that we kind of see, and that's the reason why we have turned more cautious on the corporate banking sector, including the private banks. So I would clearly say that within the banks and financial space, what we really like is now the retail oriented banks. Also the fact that the bond yields have corrected quite a lot, by almost 60-70 basis points. That also makes the NBFC segment more interesting now. We have liked in the past and continue to like even today the housing finance companies space quite a lot, because we feel that the housing market is at its bottom, and the only way it can move from here is on the upside, and the housing finance companies will be one of the key beneficiaries. So yeah, so in the financial space, I would go with some of the high quality NBFCs, specifically on the housing side, and the private retail banks.
Mahesh, good morning. Tanveer also joining in. We had a Canfin Homes stake sale by Canara Bank being called off on valuation concerns. They were not, or even if they were takers, there was a bit of a debate, or they could not find agreement on valuation. So while the HFC space is hot, and I can agree with you that the upside seems to be evident, what do you have to say about on the valuation front?
See, valuations, have been, on the higher side for, most of the high quality sectors and high quality names, in the overall market. I mean, not just the financial space, but also in the staple side and elsewhere as well. You've seen that in the auto space. The particular, attraction for the housing side, as I clearly said, is that, over the last 5 to 6 years, the housing market in India has been very, very weak. And now we are seeing some initial signs of improvement, helped to some extent, by RERA, now that it has been implemented in many states. And our primary argument in favor of housing market is that the affordability today, according to our calculation, is looking at the best levels that we have seen in the last 2 decades. And we have started to see the property developer companies reporting reasonably good numbers for the last few quarters. Overnight as well, there was a company that reported reasonably good pre-sales numbers. So there are reasons to believe that the property market is at an inflection point, which is also evident to a certain extent in the data that we see on the cement demand, etc. So that's basically the reason to be optimistic.
And I get that point. My only follow-up there is, yes, housing load demand has been robust, but that's not commensurated with the demand for homes per se, which is what you're saying, that the market seems to be at a bottom, at an inflection point, and pick up from here. the only case there being that these stock prices have run ahead of themselves. What is to say that the rally in them can continue as the market picks up, or they could well be a case of, you know, booking profits at higher levels once the economic reality of the sector actually catches up with valuations?
See, as I said in the beginning, we don't really have a very bullish view on the market as a whole. And we are looking at, more like 7-10% kind of an upside as the best case over the next 12 months. So, my view about the sectors and the stocks is obviously to be viewed in that context. So, we are not looking at like a 25-30% upside, from here on in, even the housing finance sort of space as such, but we clearly see that these will be the outperforming sectors.
Some of those stocks which are at a 52-week high, and it is a fascinating list. The general concern for India is that valuations are stretched, earnings are poor. But if I look at the combination of stocks which are at a 52-week high, and hold your breath here, because Avenue Supermart is at a fresh lifetime high. I'm not even getting into the P multiple or the replacement value there, because at 500 it was expensive, at 1000 it was very expensive, at 1400 the valuations for Avenue Supermart are going to be slightly outlandish. Then you got Interglobe Aviation, which is at a 52-week high. Pidilite Industries is at a 52-week high. Bandhan Bank is at a 52-week high. Titan touched a 52-week high last week. Page Industries is at a 7-month high. Mahesh, if valuations is the real concern, why are markets still paying disproportionate amount of premium to some of these consumer names? Stocks like HUL, Page, Titan, Avenue Supermart, they are trading at P multiples which are unheard of, 70 times, 80 times, 90 times, and yet there is a price action which seems to be indicating that fresh money is chasing these stocks.
Yeah, see, Nikunj, what clearly is happening in India over the last, several, years, I would say, is that the money has been coming into the markets over the last few years, more so from the domestic sources, and before that it was more from the foreign sources. So, in a nutshell, money has been coming in. Now it has to find its way into something. The thing is that the capex cycle recovery, whether you look at the industrial side, the infrastructure side, or even many sectors which haven't really not been doing well, and especially all these investment cycle related plays. So the money is coming in. There are some sectors and some stocks which are not doing well. So the money is clearly going to the stuff which is doing well, and that's the reason why you continue to see the multiples going higher. So I mean that's the simple reason that one can explain. So the big worry will be that what happens if this liquidity begins to be a little bit tighter, and as I mentioned earlier, the two big events to watch out for is one, what happens with the ECB, the European Bank, what it does later in the year, and I'm also sort of seeing some initial signs of a bit of a slowdown in the domestic flows as well. So I think that will be the big risk for the market as a whole, and obviously some of the sectors and the stocks which are not doing well.
Mahesh, in such a scenario wherein there are domestic uncertainties, globally you don't know, every morning you're waking up and checking Donald Trump's Twitter account for his latest message out to the world, what is it that you do? What are the safest hiding spaces? Is IT a sector that you should hide in? Typical defensive at it maybe? Should you look at pharma? What is it that you do?
So as I said, so one theme that we are super bullish on is the housing recovery space. So that actually includes property developers, housing finance companies, cement, the other building materials excluding cement as well, like the likes of pipe, the construction pipes, and some of the household product companies, which are into the basic segment, like the fans and the lighting, etc. So this whole bunch of sectors related to housing construction or that kind of thing is what we really like. The second, interesting theme is, also on the rural side. We have seen a significant stress on that part of the economy for the last 3-4 years. We've had good, first good monsoon. Hopefully the initial indicators that the next year, or this year now, would also be good. As I mentioned before, I am firmly certain that we are looking at least a 15% increase in the rice paddy MSP, in a few months' time. So I would say the rural, consumption story looks pretty attractive to us. So we are overweight on the staples as well. And I hear Nikunja's point earlier, on the valuations, but I think that's, still a space which, can give you visibility on growth. Select infrastructure segment like roads is where, once again, we have seen a reasonably good order like booking last year. This year should be no exception. So that's the third segment, or the third theme. And yes, and then there will be some of the bottom-up sort of ideas. But from the top-down thematic perspective, these are the three themes that we are the most bullish on. About the sort of IT services. So IT services, we have sort of tactically turned neutral, because of various concerns that we see on the domestic side. It's still not really a sector that I would buy and hold for the next 5 years, but it's a good sector to kind of tide through, in the near term, when we're talking about these domestic related uncertainties. On the pharma side, we are sort of keeping a constant watch, on the developments there. Because it's a sector where we've seen significant correction in the stock prices over the last year and a half or so. But mind you, while the stocks have corrected, so have the earnings estimates as well. So in terms of P multiple, we haven't really seen too much of a correction. So yeah, so there are some select names in there that we like as well. Also, some of the medical services companies, on the hospital side is something that looks interesting. So our bias, still remains more on the domestic side and the segments which, where we have a greater visibility, of, some fundamental improvement.
Okay, that's an exhaustive list. Thanks for helping our viewers with that.